February 28, 2026, the US and Israel launched joint airstrikes on Iran. Iran's supreme leader was killed. Iran shut down the Strait of Hormuz, the single most important oil shipping route on the planet. Gas prices started climbing. Economists started using the word depression. And 6 weeks later, the S&P 500 hit an all-time high. If that doesn't make you want to flip a table, you don't fully understand how insane that is. First, let's talk about what actually happened to markets when this war started, because the mainstream version skips a lot. The S&P 500 dropped about 9% from its January peak to its low on March 30th. Your retirement account was quietly bleeding. Oil was going haywire. Brent crude jumped from around $72 a barrel before the war to nearly $120 at its peak, a surge of more than 55%. Gas at the pump hit $4.10 a gallon nationwide, up more than 37% since the war started. Meanwhile, the International Energy Agency called this the greatest global energy security challenge in history. JP Morgan was projecting supply losses of up to 16 million barrels per day if the Strait of Hormuz blockade continued. The IMF cut its global growth forecast. Recession warnings were everywhere. And then, something very strange happened. The S&P 500 hit an all-time high on April 16, 2026, just 47 days into the war, while the strait was still blocked, while gas was still $4 a gallon, while nobody had signed a peace deal. So, what on earth actually happened? There are 3 reasons, and none of them are, the economy is doing great. Reason number 1. The market doesn't care about today. It cares about 6 months from now. This is the thing that breaks most people's brains. The stock market is not a scoreboard for how the world is doing right now. It's a betting machine for what people think will happen next. As JP Morgan's senior markets economist put it, the stock market is always trying to price what the world will look like 6 to 12 months from now. So while you were watching the news in horror, Wall Street was running a different calculation. They looked at Trump, they looked at his track record, and they made a bet: this doesn't last. Investors have been conditioned to believe that Trump will back off when the economic pain gets too intense. So they bet big on the stock market, which caused the stock market to rise. That's literally what professional traders were calling their strategy. And so far, it's working. Reason number 2. There's something else driving this market up, and you've definitely heard of it. It's AI. Top companies are betting everything on AI. Microsoft has pumped over $80 billion into AI infrastructure in 2025 alone. Meta announced it would spend up to $65 billion on AI this year. Amazon, Google, and Apple aren't far behind. And Nvidia, the company making the chips that power all of it, saw its revenue grow 114% year over year. Now here's where it gets interesting. Everyone's saying on social media this is a bubble. But here's the uncomfortable truth nobody wants to say out loud. Nobody knows how big this bubble gets before it pops. And that's exactly what makes it dangerous. The dot-com bubble of 2000 took 6 full years to inflate before it burst. At its peak, companies with zero revenue were worth billions just because they had a website. Nobody stopped buying, because the fear of missing out on the way up is always stronger than the fear of getting crushed on the way down. This time, the companies are real, the revenues are real, and the technology is genuinely changing everything, which makes it 10 times harder to call the top. Because every time someone says the bubble is about to pop, Nvidia drops another earnings report that breaks records, and everyone goes quiet again. And right now, the AI is winning. Reason number 3. A huge chunk of the market is now on autopilot, and it doesn't know there's a war. This is the part that should genuinely disturb you. The majority of trading today is run by algorithms, automated systems with no opinions, no emotions, and zero awareness of geopolitics. They follow one thing: price signals. Price goes up, they buy. Price goes down, they sell. So when price is going up, then system activates buy signal. And that's why market continuously making all-time high. So to wrap up, in my opinion, the single most powerful reason out of the 3 is AI. The technology sector inside the S&P 500 now accounts for roughly 34% of the index's total profits. Back in 1996, that number was just 17%. It doubled. And the engine behind that doubling is the AI boom and the hundreds of billions being poured into it every single year. So if you found this video valuable, please subscribe to the channel and don't forget to hit the like button.